What's up, Traders Edge? It's Mark Sebastian, your only option, and this is your bank earnings preview and midweek update. So let's dig in. So here we are, and the SPX closed at 51.9906, just below 5,200. However, what I thought was interesting is where we didn't close, which is below the 21-day moving average. It's now been since January 4th that we've haven't had 2 days in a row below the 21-day. 21-day is 51.9859. We closed 51.9906, so we were just above that level. The other piece that I'm still watching closely is implied volatility remains really bid. It remains strong. Why? Well, we're heading into earnings season, and bonds continue to be a problem. I don't know how long markets can ignore bonds, but TLT looks like it's in a full-on free fall. It looks like it might be heading to 85. IEF, which is the 7 to 10 year, also lower on Thursday. It's weird to see the stock market booming higher with the bond market selling off, but that was the case. I don't think that's going to continue to last. Bonds weaken anymore, and I think we can say goodbye to our 2 in a row of the SPX. I continue to think we're eventually going to see this 21-day moving average broken. That's about $90 below where we are, $95. Not a huge move, but I do think we're due for at least a little bit of follow through. And vol is telling us that it totally could happen. All right, now we are entering earnings season. We already had Delta come out with some pretty decent earnings, but now we're focusing on JP Morgan. JP Morgan's the big one. It's the biggest bank, and everybody's going to be kind of paying attention to what they have to say. It is sitting just off its all-time high, over 200. If you look at earnings analysis, normally they look for about a 2.5% move, a 2.5% move in JP Morgan, and currently they're pricing at about 3.36. So the market is looking for a bigger move than normal out of JP Morgan. What does that mean? Well, my guess is that if the earnings are good, we're going to get a smaller move, maybe a little bit of a rally. It's if they miss, because this market is built on earnings growth. If they miss, JP Morgan could get face punched. So be prepared. 2 other banks that are reporting on Friday, Wells Fargo. Again, they're looking for a bigger than expected move. And Citigroup reports. Early next week, we get a follow-up with Goldman and Morgan Stanley, and of course, Bank of America. Those will be Monday, and those will be Tuesday and Wednesday. So be on the lookout for those. Then we get into Alcoa. But these bank earnings are ones you definitely want to keep an eye on because I think they're what's going to drive the market and are going to dictate things for Friday and Monday. Lastly, I just want to circle up real quickly on VIX. It is trading 1490. Closed still in kind of the bid zone. We've not gotten back to where we were on the 4th when we had that massive move. And on Friday, things looked, we hit a high, or on Thursday, we hit a high up to 17. So there is still a lot of volatility in VIX. The implied volatility is a little bit elevated. VIX futures term structure is priced basically for a continued big moves. So you can expect to continue to see, I think, strong moves one way or the other in the S&P 500 based out of the VIX. Lastly, precious metals. Gold is just absolutely gone off to the races. I don't know where it stops, but I wouldn't be shorting it with this type of move. You can see how high the vol is. This type of jump in vol typically is associated with the top, but I wouldn't bet my life on it. All right, folks. There you have it. That's what we're looking for on Friday. What's happened this week, and I'll be back tomorrow with my week that was, and this weekend with a look ahead. I am Mark Sebastian. I am your only option. Have a good one.